From the morning reading, healthcare stocks make gains as oil stocks drop as oil falls. The VIX rises. 3 of 9 sectors moved higher and 2 were unchanged on Monday. XLU, XLV, and XLP were the strongest sectors, while XLE was the weakest sector. Oil futures dropped $1.73 to close at $47.39. CL oil futures formed a bearish engulfing pattern, suggesting a short-term pullback. Breadth strengthened compared to the prior session as advancers led 1476 to 1460 on the New York Stock Exchange and led 1386 to 1156 on the NASDAQ. Following a 16-day sideways range in July, the SPY is finished at its 12th day in a new sideways range of just 2.48 points. Momentum has slowed down in the broad market as individual stocks continue to dominate since July the 11th. It doesn't get much less volatile than this. In what has been a recurring issue and likely to continue, there has been so little movement in stocks that is nearing all-time extremes. In the past 10 days, the S&P hasn't moved more than 0.75% from its highest to lowest close, and that's the second time it's happened in the past month. When occurring near a multi-year high, future returns have been muted. Buyers aren't following up with volume. On Monday, most securities on the New York Stock Exchange rallied, but volume was heavily skewed into those few issues that declined on the day. When we've seen this kind of activity before, stocks struggled. Money is leaving oil funds. The USO fund has lost nearly $300 million in assets over the past week, one of its worst losses in the past 5 years, and this isn't even including Monday's performance, which is likely to make it even worse. The knee-jerk reaction is that such a heavy outflow should be a contrary sign and good news, but commodity funds don't usually adhere to the guides that apply to stock and bond-based funds. Extreme flows in commodity ETFs has not been a consistent contrary or non-contrary guide, so I would caution against reading too much into the recent exodus. Where's the money going? Into corporate bonds and gold funds primarily. On the S&P 500 snapshot, the modest loss and minimal economic news. Today was light in economic news, and the benchmark S&P 500 essentially went nowhere, ending the session with a fractional loss. The index hit its negative 0.36% intraday low shortly after the open and zigzagged through the session in a narrowing range to its 0.06% negative close. Economic data will pick up as the week progresses. Home sales tomorrow and Wednesday, durable goods in the start of the Jackson Hole on Thursday, and the second estimate of GDP and Yellen's Jackson Hole speech on Friday. The yield on the 10-year note closed at 1.55, down 3 basis points from the previous close. Hello, this is Stephen Harris, a head trader from Falcon Global, where we model best practices for investors, traders, and day traders from entry to exit every trading day. In this daily video, I provide my opinion and insights of current market trends, market timing, volatility, and hedge risk levels for the upcoming day for the key U.S. financial markets. It is 7:03 a.m. Mountain Time, and I'm recording this in preparation for the market day of August the 23rd, 2016. Full disclaimers are at the end of the video, but be aware that this is for educational purposes only, and only you are responsible for the investing or trading decisions that you make. Okay, let's go ahead and dive into that morning report. At the time of this cut, all 4 broad market indices were up and all running about the same, about 0.25%. Crude oil, though, was down a little over 0.75%. Euro's up just above scratch. Bonds down just below scratch, and gold just above scratch. And overseas action, you have China just above scratch, Hong Kong right at scratch, Japan down about 0.2%, Germany up about 0.75%, and the United Kingdom up about 0.2%. In terms of macroeconomic reports for today of significance, you have new home sales. And then looking forward to tomorrow, you have existing home sales and then the weekly crude oil inventory report. As you heard one of the morning authors speak, it will heat up towards the backside of this week with Jackson Hole and other macroeconomic news. In terms of current volatility, we have short-term VIX has moved up a bit, 10.95. Skew still in the warning area at a 135. IV percentiles, though, continue to be extremely low, with the S&P at a 3, the Russell at a 3, the NASDAQ at a 2, and the Dow at a 4. No standard deviation moves were put in by any of the 4 broad market indices yesterday. In terms of the current charts, here's the Smp Futures Chart, and you see overnight action has us probing this upper edge of the recent range, though not quite yet broken out. Not far, though. We're currently trading at about 87.50, and you see only about 3 points away from the all-time high. So wouldn't take much, especially with the cash participation coming in less than half an hour, to be able to take out that overnight high if the market participants wish to do that. And then let's go ahead and take a look at Dow. Dow also moving up, but still, solidly in the range. Nothing really exceptional to either side. In fact, I think we're going to probably find that's the story here on all these. You also have the Russell probing towards its upper end. They're all kind of in a range until proven otherwise, though some of these are certainly starting to make, a kind of a run. NASDAQ also making a run towards the upper end of the recent range. In terms of crude oil, you see crude oil has had some weakness and a retracement. This was not unexpected. And frankly, if we were to try to figure out where this might pull back to, that it might pull back to about the top of the cloud here, about 45.50. That's certainly top of the cloud as it is over here. It's actually in the cloud right now. But that it would pull back to this 38% retracement after this really big, quick move up. Wouldn't it be a bit surprising, especially as volatile as crude oil can be? Then the question will be, where does it go from there? Right now, we've had a series of higher highs and higher lows on the short term. And obviously, that would still be in play all the way down to $41 and change, because that was the last swing low. So it'll be kind of interesting to watch crude oil. Crude oil has been quite a ride. Another one that's been quite a ride lately has been gold. And gold, challenged support yesterday. And you see in the recent action, literally just came practically to the penny to the former swing support and then reversed off of that. So far is up for today. Bottom line, it's still in a sideways range. Nothing really there to get excited about. And then on bonds, bonds are moving up, but still inside the cloud, still neutral, still in a sideways range, so nothing dramatic to be said there. And the VIX also in this very low, almost 3-year low support area, just barely up off of that, currently trading at less than 12. So kind of keep that in mind as well. So bottom line, charts aren't really pointing us to any expansion at this point. We continue to kind of be in these sideways consolidation patterns across all these key markets, and nothing really that's pointing us to a big move today. In terms of the daily report, no changes in the top section here of real significance. We're still market trend phase, opinion of phase 3, bull flags is the expectation. It is in the 3 market timing signals. For our first mechanical signal from IBD, confirmed uptrend, bullish. The second one, GMI index, a perfect 6 out of 6 with a buy signal in place since 7-1. Stock charts decision point scoreboard, still giving us these mixed signals with cross signals coming on the short term and the long term across all the indices. So very, very choppy action being predicted there. In terms of the consensus, overall consensus of these signals is bullish, but not much momentum or energy behind this would be the expectation. Portfolio sizing opinions both still at 100%. Intermediate term market posture still all very strong. But notice they're starting to get a little closer to that 80 line. And at 80, of course, this is where it would drop into a weak bear. So not there yet. And it can stay in this area for prolonged periods of time. So there's no prediction that this is going to break down at this point. And you also have this bullish sentiment line, which is supportive of this intermediate term posture. Strong trend still in place. Hedge warning status still at 0+. Normal with some cautionary aspects. In terms of the three strategy opinions, the VIX is now in the acceptable window to initiate new positions for novice traders. And of course, it's been bouncing back and forth between acceptable and borderline acceptable as that VIX has been hovering around the 12 zone. So just kind of keep that in mind. If you're a particularly cautious novice trader, you know, the premiums could be so low as to not justify the risk. And you know, that might be something that needs to be taken into account. No changes on the covered calls or put selling from the opinions that were given yesterday. Still 1 to 2 ratios in the money, out of the money, and also low beta to high beta position sizing and allocations to your portfolio. In terms of the special warning areas, we still have the same group of warnings coming to us from the volatility zone, also from the trend base, still relatively strong neutral signs on the New York Stock Exchange new highs, new lows indicator yesterday, and the key intermarket risk aversion indicators also really quite neutral with 2 on, 2 off, and 1 at neutral, and very poor kind of consensus coming from that cluster of indicators right now, and that probably is very representative of this kind of sideways action. One of the morning authors mentioned about you can't get much less volatile than this, and this is certainly showing up across all these indicators. In terms of sentiment, short term is neutral, intermediate term slightly elevated. Fear and greed index has dropped actually out of that upper quartile now. So again, slightly elevated, but nothing extreme anymore. So kind of keep that in mind. In terms of sector specific, we continue to see telecom, consumer discretionary, healthcare, and utilities as the weakest sector, though yesterday, utilities, healthcare, consumer staples, you know, were all kind of the more positive. But with the exception of energy, all these were basically rotating around scratch yesterday. Not a lot of movement top to bottom compared to many trading sessions. That should be enough for today. We're going to go ahead and hit the disclaimers. And disclaimers, as always, hit the pause button if you need more time to review the disclaimers. Also note the hyperlink down here at the bottom for the full set of disclosures. Manage that risk and everything else should fall into place. We'll see you back here again tomorrow with the Falcon Global Market Preview. And in the meantime, good trading and go learn something.